Welcome back to Income Trading 101. Today we're going to take a look at Pfizer. And today is February the 4th, 2021. And on early look, I noticed a couple things. I didn't realize how much Pfizer had really come off here recently. A lot of that has to do with earnings. They reported earnings yesterday, which was it looks like a negative 40 cents or 40 cents less than what was expected. The expected was 50 cents. They reported 10 cents, so that's 40 cents per share earnings less than what was expected. So I remember this bump here in late November had to do with their vaccine. Pfizer is one of the main creators of the coronavirus, the COVID-19 vaccine here in the U.S. So let's just take a quick look. I'm going to spread things out just so we get a better sense of where we are in general with Pfizer in their timeline. So looks like we had highs back in 2018 for this stock, as far back as I'm going to be able to use. And we had a decent, pullback and rally again. And now we are experiencing a lower period. So let's start off just to be consistent. We'll go ahead and start off with the moving averages like we typically do. Moving averages just give me an idea of where the stock is today relative to where it's been. And I'm going to set this over to a 10. This will be my short term. I'm going to put it in green because it's going to control my buying for the most part. I'm going to make this second one, I'm going to put it in red. It's going to control my selling. It's going to be the 20-day, which is more like a 1 month. And then down here, we can leave in yellow, but we're going to make this indicator a 60-day or quarterly. It's a 3 months. So it's interesting. We can see that right now, Pfizer, let's expand it back out to be roughly, there's roughly a year right there. Man, this stock has really moved. Now again, this period here had to do with the, back in March of 2020 and the rally through mid-April or up to May. That was experienced by the overall economy. Now I'm looking for what this stock is actually doing on its own. And it looks like right now we have a situation where all three moving averages are in line, the 60 on top, then the 20, and then the 10, which is a clear bearish sign for this stock. I'm going to go ahead and get rid of the volume data too. I don't use that as much. I only pay attention to it when I think it's really relevant. But yeah, take a look at that right there. Let's see what it looks like. We're going to change time frames just a little bit. Let's go to the 1 hour. Just curious on the 1 hour, still the same. I like to see it on the 1 month just to get, again, a sense for you long-term investors out there, what this is like. So at this point, this yellow becomes a 5-year average. We're still kind of in territory right now where this stock could end up, this could still end up being a longer-term bearish. Although you see here from 2020 through currently, you're getting higher lows and higher highs, which tends to be a bullish signal. So on the monthly, for those of you who are going to be holding long term, if we get a bounce on off of this current level, then that will actually straighten out all of the moving averages and allow this to still be sort of a longer term buy scenario. So let's kick it back out to the daily. We're going to move on to the MACD. It's one of my favorite indicators because it takes a mix of the moving averages and also adds a bit of a momentum element to it as well. So it's the same or similar information, but crafted in a different way. So you would have had a sell signal back here in mid-December, and right now we're kind of inconclusive. We are below the 0 line, which would mean that we're looking for a buy, but we're still going, it looks like we're going lower relative to this one. So no clear indication with the MACD. I would like to do one thing before I move on to Fibonacci analysis, and that's, I need a line. I need a line. That's what I need. So if I were to draw a line from here, you kind of get a sense of a trend line, which has been broken this week. So this is definitely bearish for Pfizer. For it to keep this same sort of higher low scenario, we would have needed to see a bounce off of that trend line region that I drew. And of course, when you're doing technical analysis, just know that any line you draw, you're looking for market relevance, not necessarily relevance because you drew the line. So, but this lets you know this trend was headed higher and there's been a break, a clear break. Another one that's interesting is this region here has been, in fact, I'm going to change that. No, I'm going to take this, move it more there, pull this down a little bit, and that is great. There is, by definition, resistance at this line, and you can see that period was tested in early January and late January rather, and fell from there. So yet another signal to say like this might actually be a a bearish signal for this stock. Biggest caveat is the fact that they had earnings. There would have been, in the days prior to earnings, there would have been an idea at least, or some anticipation. They may have issued a warning to let you know that the expectation was going to be lower, or that the results were going to be lower than expected. So let's go ahead and see if there's any relevant Fibonacci retracement to look at in this one. I'm not going to take the Fibonacci retracement of this move because we basically had a 100% from here. We'll say in March of 2020 up through we'll call that early December of 2020, we had essentially a 100% retracement of the last big move, almost exactly. So that's less relevant. Now I want to take from this mid region, from here to the top there, just to see if there's anything that we should be taking a look at. So we're going to look at the low from March 2020 all the way through this high from early December and see where this current level is, because this might also give us an indication that we've reached a level that might actually be bouncing off. And look at that right there. We have the 50% retracement of the last big move. So that move for most of 2020, the 50% level is $34.80, and we are right there. So maybe the stock isn't as bearish as I'm thinking. This could be, you could have a bounce off of the 50% level that would push the stock higher. But certainly if I were trading it, I would trade with caution, because there are multiple indications that this stock is heading lower, certainly in the moving averages, looking at trend lines and whatnot. But this 50% retracement is actually a strong level, and if it can bounce there, if it bounces from there, and we see back in May of 2020 that $34 region played support, it was a little bit of resistance in June, and when stock bounced through that, it's sort of, this area has sort of been a mix of support and resistance. So we'll see what it turns out to be. I wouldn't look to trade this one today, at least not for a short-term trade. If you're in it, for the long term, that's a different story. But for this technical analysis, I would say we need more data, because it's sitting at the 50% level of its last big movement, and it also the moving averages are really signaling, because of the last few days, signaling that this is a bearish trend is beginning. So that's it for today's video. Thank you guys so much for watching. Be sure to subscribe and feel free to leave a comment, and check out the description of the video for more information. Take care.